Hey traders, Raghee here, and in this free video we're going to cover the patterns that we saw this week and what implications they have for not only day trading but longer term implications for movement back up to points of control or even recent highs. Now I don't mean all-time highs, but recent. So let's talk about the pattern and then we'll talk about where the market could go. So we're going to take the ES first. So the pattern that I'm looking at is a minor low pattern, which those are the first two candles of the pattern. This is an inside day, which ends up really being a pattern within the pattern. So let's break it down. What I'm looking for is a pattern that looks like this, or a pattern that looks like this. We actually have both, and we still have yet to get our breakout. So I'll be waiting for the confirmation. If I'm an intraday trader, there's nothing on the S&P that allowed me to say, hey, I've got an intraday trigger for a pattern-based confirmation of directional bias. So let's head on over to the Nasdaq next. Now, I just want to mention that just a few days ago, I did another video about the three markets, the three equity-based markets that I'm most interested in terms of relative outperformance. And that was the Dow, the IYT, and the XLI. So check out that video because that still holds true. The next pattern here, NQ, again looking for the market to settle down into a minor low. And the minor low actually did trigger yesterday in terms of directional bias. And in yesterday's candle, which was this one right here, we did get long the NAS before Jerome Powell began his testimony. So that actually worked out really well, and we did take a quick buy based on the confidence that I had that we might get some follow through. So that worked out well for yesterday. But today, I'm not looking for anything because today actually is an outside day. So we'll see what candle follows tomorrow and whether or not that will set up Monday. So Nasdaq for me is all about Monday now. Now let's get over to the Dow, which from a relative perspective is my favorite. And did any of the Dow trades fire off in terms of the minor low? It actually did not. We had an inside day. You know, the aggressive version of directional bias for the Dow actually did fire long. So if you were looking for very temporary, a quick play to the upside, as long as the market remained above yesterday's high, that would be valid for a short period of time. But this is something I want to share with you all here. Caution flags. When I'm day trading and Jerome Powell is going to be on the schedule, especially right at the end of the initial balance hour, 10:30 Eastern, you've basically taken, meaning Powell, we have a day where the morning session can take us from 9:30 to 11:30. Right at 10:30, here comes Powell. That cuts our trading morning in half. It also increases the volatility. It also increases the hesitation for follow through and so many other things that make me not want to commit to much past 10:30 and makes me very hesitant into 10:30. And so if I'm going to take anything, it's going to be very nimble, like what we did in the room yesterday. So think about what's on the calendar, what that does to your morning and follow through. And you'll notice the last 2 days have really left us with not a lot of time in the morning to work with. That's okay. That's all right. Next week's a brand new week. We'll have Powell in our rear view mirror and we can get back to work. But we're getting back to work in a sideways market. We're getting back to work in a market that I would consider as largely a stock or sector pickers market. In overall uptrends, I think it makes sense to go broad with the watch list, to bet on lots of things. But once the market goes choppy, the way in which we start to discern what we want to play versus what we don't want to play becomes much, much more important. We'll talk more about that in upcoming videos, but in the meanwhile, that's the breakdown, and I'll see you in the next update.